Good morning. We're taking a look at Ftse, and obviously we have to be pretty careful today with the states on holiday for their Thanksgiving. So, should be little or no action out of the US today. Ftse, however, now we saw it come down and it cuddled that 9-day moving average. That came in at 63.77, LO was 63.74. We are currently back above this line that's coming in today at 63.83. We've got our daily pivot at 64.12, intersecting with the weekly pivot that is coming in at 64.22. So, are we going to make this break today? From from the last 2 days' action, the market did seem like it really wanted to break that 64.68. Luckily, we've got our very long position at 64.59, praise be. But it didn't do it, and yesterday we saw the sell-off. But it's not selling off either. It really is staying within this pattern here. It really is. And that pattern there isn't a bullish pattern. Especially now it's got a double top as well. You can see that there. So there are a few reasons. There's your top. And this is your other pattern that you're looking at here. Okay. Now, this pattern here comes normally after a large bull run, which we've seen obviously since the beginning of November. So that upward waving flag is negative. The double top is negative. The stochastics look slightly negative. What we need to do is not be short, not be long, unless the market makes a break and stays above 64.75. Anything under than that, it stops going off, and we don't want to be caught in the headless chicken brigade, especially not today. Look at the downside support. So you've got your 9-day moving average coming in today at 63.83. That is intersecting exactly with that downwards resistance line, which is now the support line. That's coming in at 63.83 also. And I think caution is the way forward. We've been very lucky with Ftse the last few weeks. We seem to have been contrarian traders, but got on the right side of it. Now, I look at that pattern and I think, well, that's not going to go down. However, if we break 64.75, I will reassess, because then I think we're going to go to 65.15 to 65.27. Then again, I will reassess. Any longs to be covered prior that resistance, obviously. Now for today, you can buy down to that moving average and trend support line. That's coming in, as I said, 63.83. But you want to leave quite a tight stop. So I would suggest leaving a stop below here. I know it's a long way down, okay, but it is like 63.23. If you wanted to do a very tight stop, you could put a stop below 63.60, and that leaves you with virtually no exposure and keeps you in if the market does go higher. But don't let it, don't be greedy. Keep looking at those resistance levels. I had to yesterday. Did I think it was going to break? Yeah. Did I want to take my profit? Of course. On the off chance that double topped, which it did. Happy days. So use the levels that I give you that will help you, obviously, in determining what the right entry and exit levels are. Where we are now, if the cash opens up and we do go above both the daily and the weekly pivot, that's your sign that we're going to go back and test the 50s to the high 50s. Okay, that's where you're covering. And as I said, you can attempt shorts there, stop reverse above 64.75, but just get out of your profit at that high 50s area. And as I say, only go back in above 64.75 for longs. Okay, good luck. I will catch you in a bit.